Welcome to the Grow Your Money podcast, where we're on a mission to change how we talk about money. Our fireside chats are the heart of our show, bringing the energy and excitement of in-person events straight to your ears. We aim to connect you with inspiring voices and stories that matter, sharing relatable experiences and insights that will transform your financial life. But this isn't your typical money show. We look at the emotional, psychological, and cultural factors that shape our relationship with money. So hit subscribe and join us for another episode of the Grow Your Money podcast.
My name is Tynah Matembe, and I'm the founder of MoneyMatiX, which was set up to help diverse people to understand how to manage money and make the most of their money. One of the key things I like to say is that dealing with money is the most unavoidable aspect of life. Whether you have it or you don't, it's going to affect you one way or the other. So it's a very pertinent topic, and so thank you so much for having us join you today. I'll let Stephen introduce himself as well.
Hello, everyone in the house. So my name is Stephen Babatunde, and it's a real privilege to be on this platform with one of the best, if not the best, Tynah, and thanks, a big shout out to Black Professional Scotland for this platform. Get your pens ready for your questions and to take notes. This is going to be one that you will not forget.
Thank you so much. Yes, so we'll dive into it, and I wanted to start off by giving a bit of a disclaimer, both for myself and Stephen, to say that this is not a financial advice session. It's really a personal development session for us to think about how we start approaching things. Really, what we've prepared for you is framed around setting and achieving great financial goals. So I'll start off with a small background story. A key thing of what we are trying to do with this session is to give you some inspiration, first of all, and secondly, the first step you can take on the next journey, whatever that journey looks like. One thing I want to discuss or talk about is making a decision, being where you want to be and being fully immersed in where you are. When we had moved here, myself and my husband moved here 15 years ago now to the UK, to Scotland actually. And one of the first things that used to happen is when we'd get money, or when, and if you have a bit of money, you've saved up a little bit, would pick up the phone, call our parents and be like, guys, we have some money, go and buy us a plot of land. We have some money, go and do XYZ, we're sending money back home to invest there. That happened 2 or 3 times. And then our parents were like, well, hang on a minute. My mom was like, excuse me, guys, did you guys move to the UK to turn me into your secretary? No, surely you've gone there to make a living, to make a life there. So are there no opportunities there? Make the UK work. When you come back here, you'll make it work here. Make the most of the investment and the time that you're spending in the UK. If you decide to live there for life, you'll have something. If you decide to come back home, then you change your mind, then you do something else at that point. And that really, really changed our perspective on investing, on managing money, on making financial decisions. So I just want at the outset of this conversation to have you thinking about, where are you? Are you in the UK right now, or are you in another country? Are you where? And when I say where are you, is where are your footprints being? It doesn't have to be the UK that you decide to make it, but if you decide on a place, make it that place. Make a choice and say, this is where home is for now, and make home be home, if that makes sense. And when I say make home be home, I mean make the most of that, thrive in that place. Plant a tree and water it and feed it and make sure that it grows. Because especially diasporians, one of the things we do is we spread ourselves too thin. You're living in the UK, but you're sending money home, which is not a bad thing at all. So it's just, at the outset of this conversation, I wanted to set that scene, that please think about yourself and where your financial roots are going to be. Make that decision of where your financial roots are going to be, and make that decision around a 5-year and 10-year plan. Once you make that decision, everything else will be much easier to achieve. So that's the first piece of homework. Sit down and reflect, where is my financial grounding going to be? The next thing that I'll talk about, and that me and Sis Stephen have been talking a lot about, is setting goals that scare you. So you need to have a balance of a goal that's achievable, but one that scares you. Because otherwise, what's the point of waking up and going to work to live hand to mouth? So I like to know that I'm doing things that are going to make me much better tomorrow, and that I'm going to leave an inheritance for my children. That's what wakes me up in the morning, And I don't want them to have the exact same life as me. So I always say my parents came from the village to come to a city. I've come from the city. I've gone abroad. I want my children to be heading towards Mars, something going towards Mars. So I have to set myself up in a way that does that. And guys, you don't need a lot of money to start planning. Everyone can make a plan. Everyone can make a plan. Whether you have nothing, a plan is the first step to going on to the next journey. So deciding on what financial goal, what's the big thing that you can do today to change tomorrow? And sometimes it's just literally looking at what your money looks like today. Sometimes it's just thinking, I don't have enough money right now, so I need to get an extra source of income. At the moment, I'm earning £10 and spending 20. I need to fix that. What's the one decision you can make today that will take you a step closer to your financial goal? And what's that financial goal? What are our financial goals? Are we setting goals and just saying, I want to go on holiday next year. I want to buy a house. But then what's the smartness in that goal? What specifically is the goal? What do you want to achieve that goal? And what does it cost to achieve that goal? A goal is like if you're going somewhere, you want to go on a trip, you want to go on holiday, you find out how much the air tickets cost, you find out when the trip is going to be, you set smart priorities around it. That's what we should be doing with our financial lives as a first step. So decide where you want to go financially, make it a priority, visualize it. If it's a house you want to buy, take a picture of that house, put it on your fridge freezer, look at it every morning and speak life into it. Think about how much it's going to cost you. I'm always saying, and we're having this conversation earlier, that just the thought of saying I want to go and buy a house is not enough. Go and view houses. Go and view houses. Go to the bank and ask about them without a penny in your pocket, because that's the first step for you moving in the direction towards your goal. So don't think about, I don't have enough right now, so I can't do anything. No, you have to start. You start preparing before you have the overflow. And that's the only way that when the overflow comes, you'll be in a good position for it. So with that backdrop of you setting financial goals properly and you deciding where your financial future is, like where you're setting yourself up financially, I'm going to give you a small framework that can help you to ensure that you're making the most of your money. So one of the things we've said is, first of all, sit down with your money and have an honest conversation with it. Sitting down with your money does not mean that it has to be in a good place. It's literally just thinking, where are you? How much is coming in? What are all your sources of income? What are all your outgoings? And what are you doing with them? Be very honest with yourself, because this is a health check for yourself. And it's no matter what the decision is, no matter what it looks like, it's okay. I will share a story with you at the end of this about, coming from extravagance to lack and digging ourselves back out of a hole, and how you can do that. So please don't worry about where your money is at. Think of it as the first step in your journey with money. So sit down and have breakfast with your money. Have breakfast with your money. Put everything on the table. This is what I have coming in. This is what I have going out. These are the options. This is where I think I can cut back. Be honest with yourself. Some things are not needs. Some things are not needs. A few months ago, actually about 6 months ago now, I was desperate for an air fryer. And I was saying, I need an air fryer. I need an air fryer. That is not true. You don't need half the things that you're buying, especially if you're not in a good place with money. So have that frank conversation with yourself, first of all. Once you've had a frank conversation with yourself, make sure that every pound that you're earning is working for you. You are the person in charge of your money. Do not be a slave to money. you are the person that is the boss of the money. When money comes into your life, it is your slave. It is basically, it's your worker. It's like if you have working ants working for you, you're the master of those ants. So make sure that when you're sending out every pound out of your life, it's going to go and add value. And if you're taking notes, please, this is a point for you to write down. This is how to ensure that every pound that comes into your life is working for you. I use a framework called the 70, 10, 10, 10 model. That's 70, 10, 10, 10. If you think about a pound has 100 pennies in it. So every pound that comes into my life has to do 4 things. And those 4 things are divided into 70% that I can spend. And that 70% includes my groceries, my mortgage payment or my rent if I'm renting. It includes any expenses that I have, going to buy fuel, sending money back to someone in Africa. Anything that is an expenditure is within that 70 pence. So for every pound I have, I should not spend any more than 70 pence. If you're spending more than 70 pence per pound you have, you're going over. You are not sowing into your future. You will not have enough to do more tomorrow. So no more than 70 pence that you should be spending on day-to-day on anything that's happening today. The next 10%, you should be saving. So saving first of all, you should have an emergency fund. So 10% saving, that's 10 pennies should be saved. Now, we tend to mistake saving for investing. There are 2 different things. Saving is money that you're saying, I intend to go on holiday tomorrow, or the boiler might break down, or the car might break down. I need to have money set aside to deal with those emergencies or issues or plans that I have. That's money you save. Investing is money that's working harder for you. And that's the difference. Investing is that I've put 10 pennies away, but I'm expecting that in 1 week or 1 month's time, I will have 11 pennies. That is investing. Anything that's just sitting in an account and not doing that is not an investment. So don't look at your bank account and think, oh, I have 100 pounds, so I'm good. No, if money is not working harder for you, it's not being invested. So the first 70 pence is for your expenses, including sending money abroad, the air fryer, that's an important thing in quotes, everything that you're spending. The next 10 pence has gone to your savings account, including planning for emergencies. The next 10 pence you have invested. And guys, there's a lot of material around investing. Once again, I'll emphasize that this is not a financial advice session, but these days there are so many ways to invest. There are so many platforms that can help you to learn how to do micro investments. By micro investments, I mean, if you're so worried and scared about, putting a lot of money in one thing, putting aside the 10 pence per pound to, let's say, 3 or 4 different ways of investing in stocks, investing in companies. You can decide that every month I'm going to put just 10 pounds or in a stock, and another 10 pounds I'll put towards buying shares in a company. You can do it that way. You should have 10 pence doing that. And the last 10 pence, guys, you should be giving. Because guess what? If your hands are tied, if your fists are tied, no more can come into your life. I'm a Christian, and so I believe in tithing and giving to good causes. And those good causes, guys, are not our family members. It's not your daughter asking you for a dress, It is giving to a cause that you do not expect anything back from. So that's the 70-10-10-10 principle that you should apply to your money. And if you do that with time, and I know you may not, it's people who are, say, on hard of cash, or you don't have an income, put yourself in a scarcity place. Put yourself in a place of scarcity until you get to that place of the 70-10-10-10. So look at your money today and be honest with yourself. Is your money doing those 4 things? And if it's doing those 4 things, how is it doing it? At MoneyMatiX, we are currently running something called a Grow Your Money Challenge. Feel free to join that. You can join that and you'll get a 15-minute free session with one of myself or one of our coaches who can help you look at, your money in that framework and help you to tell you how far off you are from that, if at all. So feel free to join the Grow Your Money Challenge. You can go to the www.moneymatix.com and join it that way, and you can get a free session. Otherwise, have a check within yourself. Is every pound that's coming into my life doing one of these 4 things? I'll pause there for a moment now to see if there's any questions that you may have.
You're listening to the Grow Your Money podcast. We'll be right back after giving our partners a well-deserved shout-outs. Calling all partners, join the Grow Your Money Challenge. We're excited to present our incredible sponsors who believe in empowering individuals and communities on their financial journey. Discover their services and join us in creating a brighter financial future. Featuring the Royal Bank of Scotland, your trusted banking partner with a rich heritage and comprehensive financial services. Explore their online banking at www.rbs.co.uk. Gift Round, make group gifting a breeze. Celebrate special occasions together with colleagues, friends, and family. Create a gift round at giftround.co.uk and show your appreciation. Radiant and Brighter, promoting diversity and economic participation in migrant communities. Get involved with their innovative practices at radiantandbrighter.com. Rooted Finance. Struggling with debt or financial exclusion? Rooted Finance provides free money and debt advice services to put you on the path to financial freedom. Join the Grow Your Money Challenge in this transformative journey toward financial growth and resilience. Visit MoneyMatiX.com to get involved today.
Okay, so I want to delve into something I've been meaning to ask, and I'm sure everybody else, you are a financial inclusion expert. Can you please just quickly tell us what financial inclusion means?
Absolutely. So if you look at the existing financial services, in fact, one of the things that at the very back of the start of MoneyMatiX was all around financial inclusion, which means that products and services are one size fits all. And what do I mean by that? I mean that I've come into the UK, I've been here for 2 or 3 years. I now want to go and get a mortgage, but I don't have a credit history. And because of that, nothing with my background or my abilities to pay back has been taken into account. I'm being measured on the exact same footing as someone else who has lived here all their life. That is not inclusion. So what I'm trying to do is what I do as a financial inclusion expert is help services and organizations to be able to do scoring differently and to also be able to provide products and services that are suitable for different types of people. For example, students have very different needs from someone that's professional and working. Someone that's new to country has completely different needs for someone whose whole family lives in the UK. So inclusion is being able to account for very different customer experiences and customer journeys, and then providing financial services that are suitable for those different experiences.
Fantastic. Thank you very much. I want to ask another question.
For sure.
Before I do that, I just want to inform everybody that we'll get to the question and answer session where everybody can chip in the question. But there are some questions that we prepared for Tynah and Stephen. So I just want to put that out before we go to the question and answer session. So bear with me, guys. So secondly, I want to ask, are there specific financial challenges or opportunities that are unique to ethnic minorities, particularly in Scotland?
That's a brilliant question, Austin. I really think there's a lot of opportunity for us as ethnic minorities in the UK. 2 things that come to mind that have always been at the back of my mind in interacting with any financial services at the moment are: we have a very good and deep understanding of what community means. We have a deeper understanding than anybody born and bred in the UK, and I say that hand on heart. We know what it means to look after each other. We have come from backgrounds where, I don't need to make an appointment to come and visit Stephen. I can just stand up and say, Stephen, look after my children for me. We have a sense of community around us that can help us to leverage ourselves. We need to get better at using it, but we understand what community is at its depth. That's a very, very big thing that people lack. So that's a big advantage that we can tap into. And I'll give you an example. Many years ago, when I started this journey, of MoneyMatiX, childcare costs was so expensive, guys, like unbelievable. I mean, it was costing me more to take the children to daycare and then going to work than I was earning. Absolutely mental, especially when you have much younger children with fewer hours. But on that understanding of community, I was able to work together with 3 other moms and would each take a day a week. So there was 4 of us, would each take the children. It was crazy, but you'd have 7 or 8 children in your house 1 day a week each. And that meant we could circumvent the system. We could circumvent having to go and pay for childcare. So that is one thing that we understand deeply. And I can assure you, when we were having that arrangement, I never ever felt that my children would not be safe, because one, I know that these other moms are going to be parenting in a similar way to me. So I'm not expecting them to be watching 18s when they are 4 years old. I know there's going to be a semblance of a meal provided, like there'll be a hot meal that they'll have for lunch. And that's something that it's golden. You don't get anywhere. So with that system, we were able to have 4 days of free childcare, so to speak, because each mom just took 1 day that we could look after the kids. And guys, that's worth a lot. That is worth a lot. And I think we need to tap more into it. A key factor that would work into is trust. Being able to maintain trust with each other, keeping your word and saying what you'll do is what you'll do. But that's a big advantage we have that going for us. Another thing that I found certainly in the corporate space is we just have such a different perspective. I'm on the board of quite a few organizations. I'm on a board of a credit union, and we were talking about health and safety recently. And the understanding of the UK on health and safety and our understanding of health and safety is so different that it allows us to make bigger mistakes. And guys, lean into that. I am so proud of having a very, very bold way of dealing with things. Embrace it and be like, well, health and safety to me is there's no fire going on. And guys, that's how I would have done it, so that you bring a new perspective to life. I always say, I say this to my children all the time, the best thing I do when I show up at anything is that I'm Black, I'm a woman, and I'm different. That's going to be the case, So that difference that we bring into the community, we should show and we should, maximize. So that's another great thing that we have going for us.
All right. Can you hear me, Tynah?
Yes.
Yeah.
So I have one more question for you. Then I'll move to Stephen. I know Stephen is itching to answer. Don't worry. I have really good questions for you, Stephen. How can we build wealth in today's economies? Particularly, I want you to speak particularly to ethnic minorities in Scotland. In today's economy, how can one build wealth?
Another good question. Back to where I started off, guys. For us to build wealth, we need to start looking at this as home. We need to own the ground that we are walking. When we had been here for a few years, went through quite a rough patch. And during that rough patch, I just remember having, we'd been here for 2 years and doing really well. And as I told you, sending money back home, investing there. We hit this rough patch and we were deciding, okay, are we staying in the UK? Do we go back home? And we made the decision to make the UK home. Yeah. Making the UK home meant that I had to own everything I possibly could get my hands on here. So we set out on a journey to say, one, I'm not going to rent. That's just not going to happen. I have to buy a home. And we obsessed over that. Obsess over owning the space that you're in. That's the first thing. And again, please, I want to emphasize this is not an advice session. It is just my approach to doing things, right? Obsess over owning a space of where you are. That is how you'll feel that place is home. You cannot be in too many places at the same time, especially if you don't have enough money coming through. So what are you prioritizing? What do you have a handle on? What can you get your hand on? Is it even, there's places that you can get a share within a property. Do that. Have your mark. Make your mark on the UK or on wherever you are, first of all. You must acknowledge that. You must settle that in your mind to have a piece of where you are. Once you do that, it helps you to look at other opportunities. It helps you to do research in areas that you're trying to get into So it's extremely important that you own the ground that you stand in. So I think the first step for me is making a decision to make the UK home and then deciding what that looks like in practice.
Thank you so much. Now, following from the last point you made, which is, making the UK a home, let me move to Stephen. So for those who don't know, Stephen is a certified mortgage advice and protection specialist, authorized and regulated by the Financial Conduct Authority, with years and years of experience helping nationals in the UK achieve the goal of owning their homes and protecting their family needs with personalized insurance advice. So Steve is the mortgage and insurance guy. So, and Tynah just mentioned owning your home. I'm going to follow up with a question to you, Stephen. Now, I'm new to the UK. How soon can I get a mortgage, and what are the requirements?
All right. Okay. Well, that's like addressing the elephant in the room, right? So straight for the jugular. Okay. Answering that question specifically. So you are new in the UK. There are certain criteria that you have to meet. Again, I hope the work that Tynah is doing at some point will start. It's yielding some result, but more evidence, because right now, again, don't take what I'm saying hook, line, and sinker just yet, okay? Because I'm not advising any specific individual. So the requirements are, you have been living in the UK. You must have been living in the UK for at least 2 years. 2 years of working. You must have been living in the UK for minimum of 2 years. That is the minimum requirement. And in that time, you are not a student. You are employed, making some money, basically. So, because when it comes to talking about mortgage is just you borrowing huge sum of money and using an asset, in this case, a property, as a collateral. So as a lender, I'm going to give you the money you are looking for, but my interest is in that property. Until you pay me off, I still have interest in that property. It's as simple as that. So I want to ensure that whatever money I'm able to borrow you, you have a means of paying that money, because, there is no brainer in that, right? If you are not earning, basically, there is no way to repay what you are borrowing. So the criteria states that minimum of 2 years in the UK, 2 years of history. And I'll tell you why that. A is to ensure you have a financial footprint in the form of credit reports. You could have been in the UK for 5 years with no financial footprint. So it's as useless as being in the UK yesterday, okay? So talking about these things, there is so much meat to them. But the first thing is, you have to be in the UK for 2 years. And the reason for that minimum 2 years requirement is to have some financial footprint. That said, if you fall into a classification of what the financial sector calls professionals, doctors, accountants, lawyers, you can actually get a mortgage, that is, buy a property with a loan in the UK within your first year. Again, that's a different criteria completely. So that's why I'm saying, don't take my 2 years or my 1 year. There are different parameters that you have to fit. A doctor that's been in the UK for less than a year could potentially get a property, a mortgage, a loan to buy a property. And all that said and done, you could actually come into the UK with your money and buy a property outright without a loan. So that's also possible. You need to have been living in the UK under general circumstance. I'm a nurse in the UK. I'm a student in the UK. Using the general criteria that most of us falls into, coming in as a student. So you have a couple of years to study, then you start working, and in that period, there are other things you need to be building upon. One of them is your credit file, and what goes into that is how you are managing money, which has been spoken about. If not for diving straight into question, I was actually going to do an exercise, if that's okay. Can I just quickly do that with everyone?
Yes, please.
Brilliant. Now, thank you. So I want, we all need to get involved in this, okay? I'm going to tell you what this is at the end. I need you just come up with at least an average. If you are planning for your money, you will know if I ask you, what do you spend a month on bills? I'm not talking about takeaway. I'm just talking about your general bills, rent, gas, electricity, council tax and whatnot, right? Okay. Take your pen, or if you are doing the math in your head, that's fine. Write down what is it your total bills are on a monthly basis. All right. Now divide that. So let me shout out my numbers. All right. This is not my numbers, but this is for illustration purposes. All right. So my bills every month is £450. That's my bills. And my gross take home every month, that is before tax, is £1,000. Okay? So divide that 450 by £1,000 and multiply that by 100. So you are working out the percentage of your bills per month. Now, what you have left is your debt to income ratio. And this is the benchmark for a lot of lenders. So with my examples, 450 spending, 100, £1,000 a month, that is 45% of my earnings goes towards bills, basically. So that is a good place. That's a good place to be, okay? 45% lower, 45% or less debt to income ratio. It's like the benchmark in the UK. It could be give or take, different lender will use different yardsticks to work it out, but that is where you really want to be. Going back to the money side of things, don't forget that number, please, and make sure you are honest with yourself. If you are in the 70s, 80s, 90, you can't start talking about mortgage. We need to work on something after that. So that's just that little exercise, something to remember. Debt to income ratio, that is what that is. And is the benchmark that most lenders use to, not just in mortgage, even just getting a loan. That's the benchmark that most of these financial companies use for this thing. So I'm going to pause here before I ram it, as usual, to address other questions.
Thank you very much. So let me ask, is it better to get a joint mortgage or a single one?
All right. So when it comes to individual circles, again, I can't say this enough, just so that we are all clear. If you have two people, Tynah and I are going to get a mortgage. We are here, so we might as well do the acting, right? So we are. Well, it's not here. Okay, I was going to say take permission from Mister because it's around. So if Tynah, we are both working, but Tynah has a good credit, but my credit is up to here, right? So if we were both to go on the mortgage, we might not be able to get anything because my credit is that bad. It's going to affect our chances of getting anything. In that case, I might as well just let her do it. That doesn't mean I'm not going to go into the law side of things. When it comes to joint mortgage, if we are both good, she's earning 30K a year, I'm earning 30K a year, that's 60K. And we both have good record and credit file and whatnot. That helps our household. That basically means we can potentially borrow, subject to everything else, we could potentially borrow 60,000 times 4.5 of our combined earnings. Sometimes it could be multiplied by 5 of that. But if my credit is not any good, she might be better just going solo to ensure we have a roof over our head. So I think that answer, going single or going, if it's joint and it's good credit on both sides, everybody meets criteria, you have more money. And it could be joint and it could be, you can go joint with bad credit and you won't get anything.
Fantastic. Thank you very much. So let me ask this question. Right? Anybody can answer. What are the other examples of financial products that we have available that one can take advantage of?
All right. I'll start this conversation. I've talked about mortgage for a bit, which you meet a number of criteria, but insurance talking about, I'm sure none of us is hearing the word around insurance for the first time. I'm passionate about this so much just because life will always happen, all right? You can walk out of your door and just sleep, and, that might be you down for a couple of days or whatnot, okay? One of the financial products that is out there that I strongly and I advocate and I advise on and I actually help to set up is insurance. This is not any specific advice. You have life insurance product. You have critical illness. Life insurance, I'm going to mention the 3 categories and give you a short something to remind, a way to remind them. Life insurance pays out when you die, okay? It's not if you die, we're all going to go. It's a matter of when. So I'm not scaring anybody, okay? So if you have responsibilities, again, every time I talk about insurance, I want to ensure that you understand this. Not everybody needs insurance, okay? I'm a father of 2, blessed my gorgeous little ones, I want to be able to say, what is my plan? What is the family plan for them if something was to happen to me today, tomorrow, whenever? I want to give them head start in life, all right? If I can beat my chest by saying I have £500,000 somewhere, either cash or some asset that could be turned into cash, I might not want to consider insurance because if anything does happen to me, I have something to fall back on. But until I'm in that space, I want to ensure for little amounts, I have some life insurance in place. And you can choose to be, if you have, for parents and people with mortgage, if you have responsibilities, financial responsibilities, you want to make sure you have a life insurance in place to meet a specific need. Remember, insurance is not all about, I want it in place until I'm 100 or whatever it is. You want to target a specific need, either your children or your mortgage. So that is being covered. Then you have the critical element of insurance product, which is the one that I think, I don't want to confuse you. So out of the 3 insurance products, I'm going to talk about life insurance, critical illness, and income protection. One of them benefits the people that you will leave behind when you die. That is the life insurance. The other 2 products, critical illness and income protection, benefits you directly. If you suffer cancer, stroke, heart attack, or other serious illness, that means that fit. I must say this because different insurance provider have different definition. You suffer a critical illness that meets the defined condition of that particular provider that you are with, that money get paid out to you. Your income protection is designed to give you a regular monthly salary after your deferred period. Life insurance, benefit to your family, income protection, and critical illness, direct benefits to you.
All right. Thank you very much. Please, you have a short presentation to give. I don't know if you still want to quickly do that so that we can open the floor for questions.
All right. Okay. And I'm going to make it very short. I'm going to make it so with proper background to everything we are talking about. All right. I do this a lot within the student community, and this is exactly how I'm going to start. Remember, we've laid the foundation about owning where you are. Am I in the UK? And I say this to a lot of student group. From the moment you step in until you decide otherwise, make this place home. Because due to the nature of my job and the exposure that this afford me, some people, by the time they start to think, oh, guess what? I think I'm going to give UK a shot. You've already destroyed your credit. You have a credit card, for example. You think, I'm not saying everyone, and I'm not calling out anyone because I don't know anyone, right? I'm just speaking from experience. You have a credit card. You just spend the credit card. You don't even bother paying anything back. You have a phone bills. You think once you move house, I'm speaking directly to some individual. I don't know you, but this is what is a recurring thing. from the moment you step into this country, see it as this is your bus stop for now, all right? So you need to start building the right things, registering on the electoral roll, watching your spending, whatever you borrow. If anyone is chasing you for money, make sure you have an arrangement in place. Start building on those blocks. That is your foundation. Listen, but it's good to get loan. It's good to get debt. It's good. But how you manage those things, because your credit report is your group, is your footprint of your financial management. Whatever you've ever borrowed, how you've repaid those. So before we talk about mortgage and other big things that you might actually want to walk into the bank and say, I have some proposal. This is what I want to do. I need some money. We want to see how have you managed those little pennies in the first instance, those little car phone contract, £30 phone contract. Do you just get the contract and, stop paying and you move out? You think that's not going to follow you? No, it doesn't work that way. So start building your blocks, one on top of the other from the very beginning. That will serve you and go a long, long way. Register on the electoral roll. I think it is planning. Proper planning prevents poor performance or whatever it might be. So just make sure, I don't care if you're going to go back and, go back to wherever country you are from, if you are just stopping by in the UK, but just make sure you leave a footprint, a good financial footprint, because you just never know. I will stop there. I think once we get the question and answer going, there will be more things to be covered. So I'm not repeating some things.
Fantastic. Thank you very much. So we're going to open the floor now for questions. Please, if you have any question, you can signify by raising your hands using the raise hand emoji, or you can send your questions to the chat box, and I can read them for you. Okay, we have one hand raised. Thank you very much. Wanye, please go ahead.
Yeah, thank you, Stephen, and thank you. I've really listened to you guys and I've enjoyed myself today, especially around making UK or home. I think it's one of the mistakes that we make when we come here, that we still think we're Nigeria, so we're going to take everything we make to Nigeria or something like that. I think it took maybe working with, to desensitize me, if that makes sense. Because even when I build for them, for seeing Black entrepreneurs, when they build products, we always think about building products for our home market, as opposed to building products that serve the market where we are, and then we struggle because we can't seem to make connections and we're not there. I wanted to ask Stephen, and someone else was asking as well in the questions, do you still need to make a deposit after the bank has given you money? Do you still need to pay some sort of deposit for your mortgage? Someone is asking, and I think I would like to know as well.
Yeah, great question, and thanks so much. So right now, like I said, I might wake up tomorrow and the market criteria might be totally different. But right this moment, depends on your residency and other factors surrounding what you want to borrow, specifically mortgage. Right this moment, 5% minimum is required if you carry British citizenship or indefinite leave to remain or EU national. So if you carry a skilled worker, basically if you do not fall to the first category, you have lenders that might consider 10%. So basically if you are looking, remember qualification comes before you can actually talk about, do I need to make deposit? Yes. Straightforward answer, yes, you still need to deposit. You still need to bring something to the table. You want to borrow 100,000, for example. If that's the amount you are qualified for, you need to bring minimum of 5%. So which is 5,000 of the 100,000, and so on and so forth. Depends on other factors.
One thing I wanted to talk about as well was your relationships. You know how we're talking about, you mentioned about if someone has a bad credit history, maybe you let your partner be the one that gets onto the mortgage. Guys, this also refers to your bank accounts. Your financial relationships can actually put your credit lower. So if I have let me use myself. Let's say I have a bad credit history and I have a joint account with Stephen who has a good credit history, it can affect Stephen's history. So a third party engagement you have. So be careful who you get in bed with, if that makes sense. Don't take out joint accounts with people whose credit history background you don't know. But the short answer to your first question is yes, it's just the UK accounts that are taken into account, your credit history in the UK. One thing that happened for us when we were getting on the property ladder the first time was we had a bank account an international bank account from another country, which was taken into account. So if you have a bank account that has a presence in a different country and you have a certain type of visa, that may come into play. But generally speaking, it would be your credit rating just in the UK. I'll let you take the second.
All right. So when it comes to, I think a lot of people don't know. Some of us might be hearing credit file for the first time. So you don't even know what does it mean, how to check. What do you do? Please write this down. Everyone, check my file. Now you can Google that. The reason I'm specifying check my file is, so you have a number of credit reference engines in the UK, Experian, Equifax, and the third one. Credit score, right? So check my file, right? Well, full disclosure on this one, I'm not selling any product here, but you have the first, check my file, it costs you £14.99 every month, but you have the first 30 days free. So the reason I'm mentioning check my file is it pulls all these 3 reports in one place. So you can see what Experian, Equifax, and credit score, well, whatever it is, you can see what the 3 of them are reporting for you in one place. If you do decide to explore this, if you don't want to be paying $14.99 every month, make sure within the first 28 days of registering, you cancel your subscription. You can still go in there and see your score like other apps that are available out there. Yeah, I think you have Credit Karma, you have Clear Score. Mm-hmm. These ones can just be on your phone. That one gives you numbers, not the story, and you won't be able to see more details in it. So credit history, yeah, that's been touched on. How do you check your credit file? I would recommend that you go to check my file, see what everyone is saying about you. But please bear in mind, after 30 days, you're going to get charged. So if you're not opting for that, you have to opt out.
Thank you very much. Thank you. So just to let everybody know, in the next 14 minutes, we'll be rounding off. So sorry, we've gone this far, but I think we have, if we have more questions, please let's send them in. You can either chat with us.
I just really wanted to thank Stephen and Tynah especially. Thank you, Enoch, as well for sharing your story. And I will echo that. This is really important to me, which is why we organized it, because I've seen some of our people struggle because of ignorance. And there are things that we're qualified for, like the mortgage thing that people don't know about, and they go ahead and live 5-10 years here without owning a property because they think that they can't afford it. I remember when I was trying to go on the journey as well, I spoke to Stephen, having the right people like Enoch said. Like I would say maybe meeting Enoch and the rest of them, and just first of all readjusting my mindset to saying I live here now. This is where I need to make roots, because I would have thought about, like, I need a evil girl that I am to go to the village first and something. But I thought about it. I live here now. This is where I am. This is where my family is. So maybe I should plant some here. I can still do that, but afterwards. So knowing him as well and changing that mindset helped. And then knowing people like Stephen, so knew exactly what to do. The smaller things, the things I thought I wasn't qualified for, and with the little resources that I did have, and we did it, and I came out at the other end, and I was able to get out. So all of those smaller things, it helps. Circle helps. And knowing smaller things, I think people struggle because they didn't register for the electoral role. It's a very simple thing, like you can go online and just register. I read here and I've registered to vote. It actually helps your credit score. the simplest of things, or even allowing your bank to open a savings account for you alongside current account when they are opening it. I lived here for a year without doing those things, and I suffered. It was now when I have people coming, this is the first advice that I give. Make sure you have these little things that don't cost you anything. Do them first. Take up a contract with someone, even if it's a phone contract. Don't go and buy Lebara, pay their cost and what. Take up a contract that and just build your credit score. It helps. You mustn't take a phone. You can take a SIM-only contract. It helps you. It shows the lenders what you're doing, your credit behavior. So learning those things myself the hard way, I want people to arrive there quicker than I did. So I think speaking to the hearing from Tynah, hearing some, these are like heavyweights in this thing, and I learned quite a lot from it. So thank you very much, everyone. And Austin, I'll let you take over and close on. Thank you.
All right. Thank you so much. Thank you so much. That's such a inspiring story. Thank you very much, inspiring stories as well. I think before we close, I would just like to ask you guys, can you just briefly speak on short-term financial goals, long-term financial goals that people should always look out to imbibe, especially people who are just moving into the country, or people who don't know how to navigate their financial needs and their financial goals.
Okay. Thank you for sharing, Enoch, and for Nina, what you've said. It's very, very true. Around to the same point as well, I would say, even when you're setting financial goals and deciding things, one of the things that certainly worked for me was not having any filters. I was coming from a place of abundance, and I did not expect any different in the UK. So I did not have a circle of people who could say no to me, because I was in this bubble of expectation. So you will get to where your expectations are. If you decide that I want to have a flat, like Enoch was saying, I want to buy a flat, and that's where your expectation stops, guess what? You will get a flat. If you want to have an estate, you will get an estate, So that's why that circle is quite important. In terms of setting financial goals, short-term and long-term, one of the key things that I've found that works is set goals that set you on fire, Don't set goals because Stephen is setting a goal to get a house, and so maybe I need to do that because that's what everyone is doing. No. What gives you that fire in your belly? In my case, it's genuinely property. Like I just live and breathe property. So that makes sense for me to set goals around property. I'm always viewing properties. I'm buying property because that's just me. That's what keeps me awake. That's what I love. But do you love whiskey? Guys, there's a lot of money to be made in whiskey. People buy barrels of whiskey and keep them for 10, 20 years. And I'm telling you, it can be an inheritance as well. So widen your horizons. Widen your horizons and think beyond where you are just now. Short-term goals really should be anchored around the fact that it is something that in your current situation, without changing where you are right now, can I achieve this thing in the next 12 months? That is how I measure a short-term goal. Like short-term goals should be a bit more realistic, right? What can I change? What can I realistically change within my own influence that will make a difference in 12 months' time? And if that's just being something as simple as, I will go for a meal in a restaurant this year, I'll try and go for 2 meals a year to a restaurant. I can put away 40 pounds this month and take the children for a meal. That is fine to start there. And that would be okay as a first goal. It's important for us to have a balance between setting a goal that you can meet and then having the thing that scares you. So shorter term goals should be things that you don't need to make a big difference in your current financial life right now to achieve. And then longer term goals should be looking down the line. 5 years from now, what do I want to be? Where do I want to be? 3 years from now, where do I want to be? I strongly, strongly encourage you to have a vision board. That's a whole other workshop. But guys, I cannot tell you how many things on my vision board I have achieved. including the fact that the house we are in right now is to the spec of we had on our vision board. Vision boarding, speaking things brings them to life. Take a picture of the car you want. Take a picture of the house you want. Take a picture of the holiday you want. Take a picture of the restaurant you want. But more importantly, have that difference between this is something I can achieve in a short while and this is something I can aspire to. Then take a picture of it and believe it.
Excellent. I'm just going to make this very short. With a short term, steady the ship. Steady the ship, short term. One of the reasons I'm in this space is because I don't want people to be like me 10 years ago. I've been in the UK now for over 21 years. My first 10 years, I was just kicking balls. I was just wasting away before I woke up. And I'm in this space so that I can put fire in as many people's bum, not belly, I'm using as possible so that we can, move together, work together. All's been said around medium, short, and long-term goal. Short-term goal, steady the ship and wake up. And sorry, one more thing I was going to say, and I will leave it there. Apologies. One of the reasons, again, I'm in this space, I want, in a year from now, I want to see many of my kind in this space being able to, we want to have, in 2 years from now, I would really love to have, by my personal ambition, have at least in every single town and city in Scotland, one my kind mortgage and insurance broker that we can all, it's not just Stephen, it's not just 2 or 3 or 4. We want to have people flood this industry, doing the right job, following the right procedure and supporting each other. So if you are interested in joining the industry, I'm already on the mentorship with BPS. If it's something that interests you, I'm sure you will get more details on how to walk that through. Thank you.
Thank you for listening to the Grow Your Money podcast. If you're looking to take actionable steps toward achieving your financial goals, visit MoneyMatiX.com. That is money, MATIX.com, and join our free Grow Your Money Challenge. Let's unite in the movement to inspire people to talk about money. Thank you for being a part of our community. We'll see you in the next episode.